Well, hello and welcome, and thank you so much for joining me here on YouTube. So, as you can see here on the SPX, the best gauge of the US stock market, we have a double top pattern. Right, we've got a one top, two tops there. So that's a bearish pattern, and we've now closed below the 200-day moving average. So we're down 1.9% on Friday. Pretty decent fall. Will this bearish charting pattern continue to move to the downside, or will, in today's trading action, we close above the 200? That's certainly something to watch. With our opening range, the lower part of our opening range is 4483. We close below that and below the 200, like I just mentioned. So that's bearish right now. We're in bearish opening range mode. If we look at all the major indexes, we can see they're all below their their 21 EMAs on the daily chart, which is a good short-term indicator between bullish and bearish. So we can see a double top pattern here on the SPX, which I mentioned was bearish. Double top pattern here on the NASDAQ. Double top pattern here on the transports, and a double top pattern here on the industrials. So 4 out of the 5 major indexes have bearish charting patterns on them, and being the double top pattern, we need to watch that carefully. We look here at the different sectors. You can see financials. That's a pretty good looking double top there. If it breaks the 21, could have a move down. XLK has the double top as well, already broken below the 21, right? XLV the same. So fair bit of bearishness overall there, but again, we could rebound very quickly this week. Energy is obviously doing extremely well, but everything else looks a little bearish. Got a lot of economic news coming out this week though. The FOMC meeting minutes on Wednesday, couple of hours before the market closes, that's going to be a big one. Looking for how many rate rises they're likely to do this year in 2022, their views on inflation, that will be dissected by the experts, no doubt. So we'll keep a close eye on that. Retail sales, industrial production, housing starts and permits, jobless claims, okay, and existing home sales. So quite a bit going on this week, the Fed balance sheet, to potentially move the markets. And we are still in the middle of earnings season, so keep that in mind. But right now, it does look a little bearish, so we'll keep a close eye on that. Now, if we look at the futures market, which tells us where the cash market will open, you can see that's bearish as well. So we've got the Russell down almost 1%, the NASDAQ down 1.25%, the S&P 1%, and the Dow Jones Industrial Average almost 1%. So this futures here that you're seeing is telling us where the cash market will open. So this gives us a good heads up as to where it will open. Not where it will close, that'd be nice, but where it will open. So we're keeping a close eye on that. We could see further bearish moves down with these bearish double top patterns that we're seeing on 4 of the 5 major indexes. So keep an eye on that unless we get some positive economic news coming out or some outstanding earnings. It does look as if it wants to move down at this point, and we're in bearish opening range mode. Now, one of the trades that we have on right now is on CleanSpark. Okay. Now, CleanSpark just had their earnings, Bitcoin mining stock, just had their earnings on the 9th of Feb, just a little while ago. Look at the revenue growth here. 1,726.5% over year basis. Pretty incredible. So they've been growing their earnings very, very nicely. It is looking really, really good. Okay, and producing approximately 10 Bitcoin a day. So that's pretty impressive. Some good gross margins here remain high at almost 80%. So yeah, this is a very profitable company and growing dramatically. So if you do start to see Bitcoin have a move from where it is now, again, we haven't really seen it yet. Yes, we've seen it bounce off the lows here of just under 33,000 to where it is now, just over 42. But now we're in the middle of the 50-day moving average, which is the upper line here, and the 21-day moving average. It won't live in between these two moving averages for very long. It will have a move, breakout either way. So keeping an eye on that. Could be a bull flag. We'll keep an eye on that. And certainly it will be dictated to buy, CleanSpark will be dictated to what happens here with Bitcoin. Is it going to break above these two moving averages and have a run, or is it going to pull back again? So we'll keep an eye on that. But for me, this move down from around 67 down to just below 33 was a buying opportunity, right? I bought more Bitcoin down at that level. So that's what's happening there with CleanSpark. Our break even on CleanSpark, though, this stock that is trading right now at $8.70, our break even on this trade is $6.36. So we are still doing very nicely with that trade, and it is looking good. So there's some things that are going on. One new idea that you could look at is Disney. Now, Disney could be played to the upside. Let's just have a look here at Disney. So Disney just had earnings. You can see that it has gone from a low there of about 128 to a high there of around 156, a good $28 per share move to the upside there. So that was nice when it was oversold there on the RSI. Now, I wouldn't say it's overbought, but it's certainly not oversold anymore. A little bit of a pullback. You could even get a pullback back down to the 21 before then a move higher. But if you look here at Disney, just have a quick look here at the earnings. Okay, so earnings were on the 9th of Feb. Just have a look at that. They beat. Okay, so $1.06 earnings per share and revenue of 21.8. The analysts were expecting 57 cents earnings per share, so smash the earnings per share, and revenue of 18.8. So certainly outshone that as well. So revenue increasing 34.3% year over year. Looking pretty good, right? Very good earnings per share, very good revenue, and I think this will get better and better. I mean, if you have a look at this, look at, say, its analysis for the next 5 years, the growth rate per year, almost 40%. So a lot of money will come flooding back into Disney. Now things are opening up somewhat. The Omicron is not as bad as first thought. Many people are already vaccinated and that type of thing. And you may start to get a lot more people flowing back into Disney, right? So I think this could do very well going forward, and certainly analysts expect that as well. So with those sort of growth rates, you want to keep a close eye on this. I think this is an undervalued stock, right? I value this stock at 172.36, a real value. Should be worth at least that. But you can see the revenue, total revenue, increasing nicely recently, right? Which is very nice. And if we look here at the free cash flow, that's still nice and positive, looking pretty good. And with a stock price of 149, and my value, real value, a minimum value really, this real value is 172.36. So we are undervalued on this stock as well. So what I'm looking for is it to hold the 21, maybe pull back to the 21 before they're moving higher after great earnings and looking like it wants to move higher. So what we could do is a number of ways we could do this, but one of the ways you could do it is set up a bull call debit vertical spread. Price now just under 150. You could set up something for the 14th of April, 59 days from now. And if it goes from 149 to above 155 in the next almost 2 months, you could make a very nice return, right? So the cost, $225 for one spread. The potential profit is $275 or 122% return on risk. What I would do with this one is set the stop at 115, buy the spread at 225, set the stop at 115, your risk is $1.10, and your potential reward is $1.75. It's about a 2.5 times higher return than your potential risk. So asymmetrical risk working very nicely in this case. Okay, so that's certainly a new potential idea, undervalued, could very easily bounce off the 50 or the 21 on good earnings and then move higher. Okay, so that's another potential idea. We will certainly see how the economic news presents itself this week, and we will be very much looking at the SPX and seeing whether it does move back up above the 200, which is a significant line many fund managers look at, or it continues to sell off. We've got to keep a close eye on that. And we are, as far as our opening range goes, we are in bearish opening range, as you can see there. So we need to get above the 50 soon for the bulls to get back in charge. All right, my friends, I hope you enjoyed that. We'll talk to you again next week. All the best, and bye for now.